Thank you for tuning in. You're watching The Property Guide on ET Now. This is your one-stop guide to all property investments in India. As always, we're so grateful for the responses you sent in last week. Keep sending them in. Our email ID is at the bottom of your screen. And you can send us any question you have about buying property, finding a builder, getting a home loan, or even the taxation. On the show this week, we'll tell you what's driving growth in the luxury and affordable housing segments of Chennai and where you should be investing your money. Our experts tell us why you should consider the Jaipur real estate market. We'll also give you a list of investments in the region. And what can you buy for 100 crore rupees in Mumbai? We'll take a peek into what's being called super luxury in the city. All right, joining us today on the show, Om Ahuja, CEO, Residential Services, Jones Lang LaSalle. Thanks so much for coming in. Jayashree Kurup, Head of Content and Research at magicbricks.com, joins us in Delhi. Jayashree, always a pleasure to have you on the show. Now, in our previous episodes, we've reviewed the Chennai real estate market and given you investment options. Today, we're here talking about the fact that the city is witnessing a small change in pickup of demand in affordable and luxury. We're going to find out what pockets of the market are really seeing that demand change. And Jayashree, I want to come to you first with that. Obviously, you're probably seeing something on the website right now as far as Chennai is concerned. What pockets of Chennai are you witnessing demand in right now?
See, let me put it like this. I see a lot of activity in the 1.4 to 2 crore, the 2.5 crore, and sometimes in the 5 to 10 crore segments also. And when I see activity on the site, that really means that there is listings there and there is demand. People are searching for these properties. This is an unusual trend because people normally search online for up to about 5 crore properties. But when we see a lot of searches happening in the above 5 crore category, we would say that that is a really active segment in the market.
The above 5 crore category. And from where you're looking at it, and if you have clients coming in saying we want to invest in Chennai right now, are they looking at that luxury segment, or is it more in the affordable, easy to buy, easy to sell segment that they're looking at?
We see three aspects of Chennai doing very well. One is basically it has been an educational hub in southern India. It has 19 universities in and around Chennai, which basically feed a lot of students who come in there and they get jobs there and they settle there. The second part to this is basically you have IT sector doing well there, and the third one is a back office sector. So this creating a lot of jobs there. The buying starts anywhere between 30 lakh rupees to 7 crore rupees. 7 to 8 crore rupees is the ticket size. A lot more new launches happening in the Chennai city, that is prime area city. Lot many new launches which are lined up in next quarter and this quarter itself. Premium of the premium projects starting anywhere between 2.5 crores going up to 7 crores. Coming to ECR Road, which is now slowly, steadily, a lot of people are looking at ECR Road, East Coast Road, which was earlier perceived to be a very premium destination. That is also now picking up. Old Madras Road, which has been the IT hub of Chennai, also is doing extremely well. Considering that last year, 2013, the calendar year 2013 has been a fantastic year for commercial leasing. Last year, you'll be surprised to note 4.5 million square feet of commercial leasing has happened in Chennai city.
In which parts of Chennai city?
Primarily OMR Road. Okay. So this taking at OMR Road 4.5 million square feet of leasing which has happened. That will result into, on an average thumb rule, you'll have to look at 45,000 jobs being created next year. That is 2014.
But Jayashree, given what Om was just telling us, especially about the OMR area and the commercial leasing, which peripheral areas do you think are going to witness demand because of this? So obviously, if OMR is going to see a lot of offices come out, then there will be suburbs around OMR that will start to see demand in residential areas. Give us a list of where you see that demand coming in.
You know, we kind of broke down the demand that we saw on the site, and we broke it into three segments. We feel that the luxury within 1.4 to about 2 crore, we see Anna Nagar, Tiruvanmayur, KK Nagar. These are the areas where there is a lot of demand. And when you go into a 2.5 crore range, you see that, many locations such as Akarai, Uthandi, Kovalam, these are all around, along the East Coast Road. And we see that these areas, you are seeing a size of about 2,000 to 5,000 square feet. And there are smart homes, there are all kinds of add-ons that are coming to the houses. Then when you go to the premium homes, the 5 crore and above, I see a lot of traction in Adyar, Arepuram. That seems to be coming, if you look at villa options, it goes along goes to the ECR.
What we've done is we've gotten our guests to put their heads together and give you a list of recommendations within Chennai if you're looking to buy right now. Take a look. If you're looking for a home in Chennai, here are some interesting investment options. Alta Vida by Yuga Homes, Oxygen by Urban Tree Infrastructure, Pristine Acres by the Plaza Group, In Town and Sky Park by Vishwakarma Properties, Park Towers by Newry Properties, Park View by Gayatri Realties and Buckingham Gardens by Raj Waterscape Properties. Let's take a few questions. Arvind has written in, he wants to buy a plot of land in Chennai with a budget of 50 lakhs to 1.5 crore rupees. Please give him some options. 1.5 crore rupees in Chennai is a good budget to buy a plot of land. Which area do you think he'd be able to optimize?
There are 2-3 areas in Chennai one can look at. One is basically you can look at Kelambakam, which is little outskirts of OMR. There are a lot of plotted developments available there. Little ahead of ECR Road on the way to Pondicherry, there are quite a few options available there in terms of plotted developments. But given a choice, I would say that make it a point that you buy an apartment rather than buying a plot of land there. Considering that you are buying something which is in the municipal limits, we always look at basically appreciation. You're looking at primarily easy to sell properties. So buying a plot of land is always nice, but the longer duration, your investment duration will be somewhere like 8 to 10 years. Here you can look at 2 to 3 years, which can actually make similar returns.
One more very quick question. Jai has written in, he wants to buy a ready-to-move-in apartment in Navi Mumbai with a budget of 30 to 40 lakh rupees. Please give him some options. That's a tight budget for Navi Mumbai. Where would he have to go?
Well, I would say rather ignore buying at this point of time with this kind of budget. It will not make sense in terms of you may get into a wrong product, wrong location, and possibly a wrong investment. So it's rather avoid such investments. And if in case Jai is looking to buy something at this kind of budget, look at Pune. Look at Talegaon, which has a lot of industrial activity there. It may give you good options there. But I would say Navi Mumbai, you will compromise on your quality of investment.
We're going to take a very quick break. When we come back, we'll tell you what's driving the real estate growth in the big city of Jaipur. And if you should jump on that bandwagon, don't go anywhere. Welcome back. You're watching the Property Guide on ET Now. Thank you for staying with us. Both Om Ahuja and Jayashree Karup are with us. And we're focusing now on Tier 2 cities. This week, the focus is the pink city of Jaipur. Now, the city is emerging as a possible favourable destination for IT companies. And that, of course, as we know, may even drive real estate growth. Let's first take a look at what the prices are across the city with Avan, and then we'll come back and talk about it. Avan.
Thanks for that, Faye. Well, specific pockets in the pink city of Jaipur have witnessed a smart appreciation over the last 2 years. Property prices in Ajmer Road, which is witnessing a steady residential supply, have risen by 33% over the last 2 years. Home prices here are currently quoting at 2,400 rupees per square foot, the cheapest in the city. The upcoming suburb of Jagatpur has seen property prices rise by 29% in the last 2 years. The home prices here are currently quoting at 2,900 rupees per square foot. Homes in Tonk Road, which is a popular shopping destination, are currently priced at 2,425 rupees per square foot compared to 1,450 rupees per square foot in 2011. Now that's a whopping increase of 67% in just 2 years. Mansarovar, one of the key locations in the upcoming metro rail project, has seen a 28% rise in its prices over the last 2 years. Now the home prices here are currently quoting at 3,000 rupees per square foot compared to 2,350 rupees per square foot in 2011. The industrial belt of Sikar Road has witnessed a staggering 115% rise in the property prices within just 2 years. So the homes here are currently quoting at 5,900 rupees per square foot compared to 2,750 rupees per square foot in 2011. With that, it's back to you, Faye.
All right, Avan, thank you for that update. Om, are you seeing enough IT movement in Jaipur to justify possibly a movement in its residential property market as well?
Well, we haven't seen the kind of activity which helps us believe that there'll be so many more jobs. So I think it's a little far away in terms of this materializing into jobs and this materializing into real demand demand uptick in terms of the cities. At this point of time, it seems to be safe with 7-8 cities in India, where the real job creation is happening. It will be a little risky at this point of time to expand beyond 7-8 cities unless you have some connection to the city and where you want to buy something for your retirement or you want to buy something for your parents or family.
Jayashree, take a look at the website and tell us what's going on with Jaipur right now. We know that Jaipur is going to be on the Mumbai-Delhi industrial corridor. What will that mean for the city, and is it an alternative investment for people in Delhi who are looking for a smaller ticket size?
Jishay, right now when I look at the activity on the site, I think a lot of the activity is driven by local demand. People within Jaipur have started upgrading to properties that are conveniently located and with modern amenities. Having said that, there are a few drivers which is why Jaipur is an active market today. The metro is is in the trial run phase and the first phase of the metro will be operational in the next 6 months. This has a significant impact on the city, especially for the people who are living within the city. Today, there has been a small amount of IT investment which already happened before the slowdown, and that is what is driving the city's market. So those areas, Ajmer Road is a clear example. We see a lot of activity on Ajmer Road. Developers projects which have been delayed for years are now coming into completion, and there seems to be some activity. We also see there are some growth corridors, Sikar Road, Tonk Road, Sirsi Road, the new Sanganer Road, the Kalvar Road and the Ajmer Road. This is largely where all the activity is focused right now, and I would say that with maximum number of residential properties in Magic Bricks, there are just 4 areas, that is Ajmer Road, Jagatpura, Tonk Road and Mansarovar. Out of this, Mansarovar will get a metro boost because that is very close to the metro, the first phase of the metro, and that is expected to rise further.
All right, so that was a very clear list of advice for someone who wants to live in Jaipur. But for investors who are possibly looking at those smaller ticket sizes, does it make sense then to just go maybe to the periphery of Greater Noida and look for that ticket size as opposed to buying in Jaipur? Because you said you don't see it going that far.
Well, our view is at this point of time, Jaipur seems to be a little far-fetched in terms of job creation, in terms of lot many things which are yet to happen there, which will actually see demand in the real estate space, residential space. What we are looking at as investment into Greater Noida still has a visibility that somebody who is working in Noida where a lot more action is happening will see that appreciation which has been in Greater Noida. Somebody can look at even Dehradun, which is a city which we believe that a lot more demand comes in from the people who retire from the army, a lot more happening on the food and processing industry from that side, and a lot more action in terms of that being a feeder to the whole of North India from Dehradun and above. So we believe that's a little more safer investment at this point of time, and there's a lot more retired living concept which is picking up in Dehradun, and that's where we believe that investment may be still investment worth looking at for investor point of view, rather than looking at cities other than 7-8 cities which we believe will do well.
All right, so if you're an end user, which means you're going to live in that house, so you live in Jaipur right now, it makes sense to look closer to the metros. And of course, Jayashree gave you a list of areas you should focus on. Om telling you if you're an investor, it possibly makes more sense to focus on Dehradun and of course Greater Noida. Now before we go, here's a list of property projects in Jaipur right now that might be of interest to you if you're shopping. Take a look. If you're out shopping for a home in Jaipur, here are our recommendations. Sunshine Symphony by the Dhanuka Group, Ananda by Mangalam Build Developers, Max Heights by Ayan Build Tech, Royal Greens 2 by Joy Bharat Group, Legacy by the Arihant Group and Silver Crown by the Vardhaman Group. A couple of questions. Jayashree, we have one from Rahul Tandon who's written in. He wants to buy a 3-bedroom apartment in either Bani Park or C scheme of Jaipur with a budget of 80 lakh rupees. Please give him some options. Obviously, that's quite a handsome budget for Jaipur. What can he buy there?
Bani Park is also a very premium area of Jaipur, and the C scheme that he's talking about, I think there are very limited properties that come up. When we looked at our site, we found that we have only one option in the 3 BHK property worth about 80 lakh. He has a good budget, and if he looks around, he'll find it, but there are fewer options in Bani Park than in new developing areas. But I would say that, you know, in Bani Park, you get about 4,500 to 5,500 per square foot is the average price range, and if you want parking facilities as well, you have to pay a premium of about 400 to 600 rupees per square foot. But otherwise, I think it is possible, few options, but good place to invest.
All right, we have a question that's coming from Samir, who's an NRI based out of New York, who's written in. He wants to buy property in the NCR region, possibly for his parents. He has a budget of 50,000 US dollars. That works out about 31 lakh rupees. That's not a lot in the NCR. What do you recommend he does?
Well, considering Samir wants to do this investment for his parents and family, I would say the budget is too small at this point of time in terms of NCR, but he can certainly look at options which are beyond Manesar. He can look at a studio apartment which can be in and around Sona Road. Those can be an options one can look at, but I would say the budget is a little small. I think one should be very cautious in the options what you're choosing in terms of the family, considering it's for family.
All right. And of course, if you're an NRI, there's the NRE account that you can always consider. The returns are fairly handsome at this point. Jayashree and Om, thank you so much for spending time with us this week. It's a pleasure to have you. If you have any questions for either of our guests, write to us. Email ID is at the bottom of your screen. When we come back after the break, we'll take a sneak peek into super luxury in Mumbai, and we'll find out what's being priced at 100 crore rupees. Don't go anywhere. Welcome back. You're watching the Property Guide on ET Now. Thank you for staying with us. It's time for our Meet the Developer segment. This week, we wanted to find out what super luxury actually means in the city of Mumbai, considering these apartments are being priced between 20 crore rupees and 100 crore rupees per apartment. We caught up with Gaurav Gupta, Director of Omkar Realtors, to find out. Take a look. Gaurav, thank you so much for speaking with us. Now, we've talked about how the term luxury is fairly loosely used in our market, but what you're building here is obviously super luxury.
Absolutely.
And from what your team tells me, the largest apartment on offer in this particular product will be 18,000 square feet, which is, again, I mean, simply from a Bombay point of view, that's super luxury, but priced, interestingly, close to 100 crore rupees. Now, you have to help me understand that in an apartment, what can you possibly offer me for 100 crore rupees?
So, if you look at Worli, our concept and our vision always was that, this is a location typically, which is, once in a lifetime location in a place like Bombay. We met quite a few architects from different parts of the world, and we zeroed in on an architect called Fosters and Partners. So, I think Fosters, they've done a lot of quality developments all over the world, and their vision is very, very different. So, they came out with this concept, that to create a bungalow in the sky typically. I think the overall amenity space, if you look at it, it's roughly around 2.5 lakh square feet. And this is in South Bombay. What differentiates it further is, that if you look at the floor to ceiling heights, the 100 crore apartments, if we talk about it, the floor to ceiling height is roughly around 4.2 meters, The other element of luxury, if you talk about, is the terraces which we have. If you look at it, we've utilized terraces, in a very, very different manner, in a manner in where a customer feels luxurious. So typically, we have a jacuzzi kind of concept in one of the rooms with the terrace. Another room we have a, the children's room typically will have a cocoon kind of a concept, which is a day bed for the child typically. The living will have, different sitting elements. One of the features in the living room would be You have your inside dining as well as you can have an outside dining on the terrace.
Out of curiosity, and I know you won't have the exact amount at this point, but what will the upkeep or the community charges be on a monthly basis for a building like this one?
I think another concept is that if it's super luxury, the maintenance charges are going to be extremely high. But I think what we've done is we've taken a few steps typically that if you look at it, it's a gold certified building. So the costings for the common areas would be much less as compared to others.
Right.
So I don't think there's a lot of difference when it comes to common maintenance costs. If you take a normal project in Bombay, I don't think the difference would be that much typically. But at the same time, what we've ensured is we've given a lot of amenities to the society.
Can you give us a number?
I think it should be in the range of roughly around 12 odd rupees, 12 to 13 odd rupees typically.
All right, so tell me this, we know that the last 1 year has been a tough year for Mumbai property market altogether. Comparing this project, the one you have in BKC and the one you have in Malad and Goregaon, tell us what demand has been like, and have you had to push products, possibly negotiate across the table?
Historically, if you look at it, in Bombay, sales took place only on one factor, or what real estate was recognizable was only one thing: location, location, location. That was the historical way, your prices were established or your goods were sold typically. But if you look at today, what is the change which has taken place, is that in today's customer, he will look at, he'll look at 8 or 9 different factors. So, if you're able to get these 8 or 9 different, you're able to tick marks these 8 or 9 boxes typically, I think those are the projects, where you've seen constant sales. Like we've seen, like you talked about our Malad project, which is Alta Monte. You talked about, the project which we did with L&T in partnership at Parel, or the BKC Crossing one. We've seen sales consistently over the past couple of years. There have been small spikes, but if you talk about from an average yearly perspective, I think we've seen pretty good volume because we are able to tick mark all these boxes. We're able to show people execution. We're able to show people value for money.
But still, you have on your website an offer of 25/75 payment on your Altamount property. Is that not in some way a discount to the customer?
I don't think it's a discount because if you look at it, the pricing mechanism, if you look at it, there are two options which a customer can buy a product. One is a construction linked option, where the pricing would be in the range of, say for example, if I take the example of Malad, it would be in the range of 13,000 plus. The second option which the customer has today is to buy under the 25/75 scheme. If you look at the pricing in that, I think the pricing in that would be in the range of 15,000, 14,500 to 15,000. So I don't think we've discounted it from that perspective. It's just a different 25/75 is a different market typically. It's a market where people want to earn money against leverage typically, where they look at return on equity being pretty high.
All right, for such investors who are watching right now, we know of the products that you have available in the market that are ongoing. What are your plans going forward outside of the ones that we've already heard about?
I think going forward, this year our focus typically is, that we will be coming out in the month of May, June typically. We are working on a very big development, somewhere in the region of Powai typically. And there the concept is, we've realized that, in Bombay typically there's a lot of shortage of, I would say budget houses. Budget by the definition of Bombay's budget houses typically.
So I think by budget you mean 1.5 crore rupees? I
think less than that. If you look at it typically, what we have in mind is typically, 1 BHK, where the ticket size typically could be roughly around 80 lakhs onwards, and a 2 BHK typically, where the ticket size could be in the range of 1 crore 15, 1 crore 20 lakhs.
All right, Gaurav, thank you so much for spending time with us, and good luck with the new project.
Thank you.
Thank you. All right, so that does seem like opulence. Remember, it's a wrap on the show, but if you have any questions, write to us. Our email ID is at the bottom of your screen. You'll find a copy of the show on our Facebook page, and you can reach me personally on Twitter. I look forward to hearing from you. Thanks so much for watching.